Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES made a marginal high, which was very clearly rejected for a move down into 62.75, which in itself marks some weakness. And if we look at the other markets, we can see that yesterday the Russell failed to make a new high. So it failed to break out above its recent high of 1212.4. So given the lack of strength that we're seeing in the Russell and the fact that ES pulled back as much as it did in the S&P, we have to now approach this upcoming session with a fairly neutral bias. The larger time frame bias continues to be bullish, but on the day time frame, we are going to have to be fairly nimble and flexible, and we are going to approach it with a very neutral bias where we're going to be watching the underlying internals, the other markets, and we have to be open to the idea that the market could balance here and then still go and make a new high, or it could even be a failed breakout attempt from yesterday, in which case, we could see some decent selling. And for that reason, we have to approach it and be open to both sides, because right now we are getting mixed signals. Nasdaq yesterday put in a pretty decent breakout, and now it's also just balancing within a range. S&P put in a marginal break and very balanced on light volume here in the overnight session. Russell, like I said, it failed to take out its recent high, and now it's just balancing within a range. So heading into the open, things are very mixed, and the bigger picture bias doesn't get affected, but on the smaller time frames, the market can continue to balance, or it can even mark a failed breakout attempt, and then we can see lower prices. So off the open, we have immediate short-term support at 62.5 to 64, and then the key support on the day is going to be 58.5 to 60.5. And if we take that area out, then it's a confirmed failed breakout, and from there we can go down into the 51 quarter to 53 quarter and even the 49 to test the recent balance area low. And the 49 and the 51 quarter to 53 quarter marks the current 5-day balance area low. So that still continues to be an important area of support. And if we are running on below average volume as we go down there, then the range would already be exhausted. So we may not see much more than the 51 quarter to 53 quarter or the 49 support level. At that point, the range potential of the day may have already been exhausted, unless the market goes down on heavy volume. So keep an eye on the volume situation, and if we do start running on better volume, then it could expand the range potential. But these days, on average, we're seeing about an 11-point RTH range. So even if we break down, if we've already used up most of the range, there may not be much more left in it. And the 49 and 51 to 53 area is still decent support until broken. On the upside, we have resistance at 68 quarter, 70 quarter. It marks yesterday's high as well as the overnight high, which happens to now be the all-time high. So even though we know that that is resistance, that's the only reference point we have. And beyond that, there is no hard resistance, and we're going to have to rely on the volatility situation and the range analysis to figure out where the market might go. Like I said, these days we're seeing about an 11-point RTH range, and if the market's running on, average or below average volume, then we're probably going to see another 11-point range, even if we break out and go to the upside. So keep that 10 to 11-point range idea in mind, but also be aware of what the volume situation is in real time. And if it's very light volume, then it could be a narrower range than that. So those are really the main ideas heading into the open. Keep an eye on the other markets. Right now where the market's trading, it requires us to be fairly nimble with our bias. Just because, even yesterday's breakout was a marginal breakout. It wasn't really a major breakout on high volume. So right now, I think the market is trying to figure out whether there is more fuel left for upside movement, or whether it's going to now reject here, and then we're going to revisit some of those lower areas of support. If you are watching the Russell, keep an eye around the 1203 to 1204 area. That is a short-term high volume node. that is fairly important. And if Russell takes that high volume node out on the downside, then that would also be a sign of weakness, and it could lead to additional selling in the S&P. So today we just have to be very nimble with our short-term bias on the day time frame, and really it's going to take more real-time analysis to figure out where this market's going. And if you're not able to find a good enough trade idea where you're able to get involved at a price that gives you a minimum of 2 times your risk, so if you're using a 3-point stop, there needs to be realistically a 6-point profit target. And if you're unable to get involved at a price that meets that risk reward criteria, then simply stay out of the market. That's better than getting involved at poor trade location and then getting stopped out, and it doesn't even mean anything. So make sure that your stop is at the right place, and that the location is good enough that you can ride out some short-term balancing if needed. So we are going to be fairly selective with our trade entries today, and if that means that we're unable to capture any sudden movement that might take place, then that's okay. So this is not the market where you want to be chasing it. You do want to secure relatively good trade location, one way or the other. Long or short setups, you still have to secure fairly good trade location in order to get anything out of it, simply because of the lower volatility environment we're in right now. So those are the main ideas heading into the open. Let's see if the buy side can really step back in from yesterday's breakout attempt. That'll be one thing we're looking for. And if we are going to break out and go beyond the 68 quarter, 70 quarter, then we do need to see broad market strength. The other markets also participating in the upside move. Nasdaq was leading to the upside yesterday, so keep an eye on that market to see if that continues. NQ is also approaching some larger time frame resistance above. So beyond here, NQ has some resistance around the 46.77 to 46.80, and then around the 4700 area or so. So now Nasdaq could be hitting resistance as well, which could limit the upside in the S&P. So given the environment we're in, it makes sense to be a bit more selective and a bit more cautious on both sides, long and short right now. So those are the main thoughts heading into the open. Let's see which side really presses and takes over here off the open, and we'll take it from there.